Welcome to the Off Street podcast featuring Adam Reiner and Sean Dan. Off Street contains general information that is not suitable for everyone and contains certain forward-looking statements of future possibilities that, due to known and unknown risks and other uncertainties and factors, may differ materially from actual results. As such, there is no guarantee that any views and opinions expressed herein will come to pass. Off Street is presented for informational purposes, and nothing contained herein should be construed as a solicitation to buy or sell any security or as an offer to provide investment, tax, or legal advice. Additionally, this communication contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to their accuracy or completeness. Adam and Sean are employees of Marshall Financial Group, Inc., a registered investment advisor. For additional information about the firm, including its services and fees, send for the firm's disclosure brochure or visit advisorinfo.sec.gov.
All right, Sean, it is Tuesday, December 12th, 3 o'clock in the afternoon. We have ourselves a squirrel problem.
We are podcasting under less than ideal conditions right now.
It's a gritty performance today.
we are under somewhat constant attack from a squirrel in the walls, in the ceiling. We think it's one squirrel. It could be multiple.
There could be a whole family. Who can say?
Who's to say it's not a different rodent, but yes.
We're not talking raccoons. We can't deal with that. It's a squirrel.
It's a squirrel. All right, fine. It's a squirrel. Sorry for putting that out there. But yeah, just if at any point you hear a commotion or something punched through a wall, you know what it is.
Yeah, part of the joy of working in the burbs, Sean.
This nice, beautiful old office that we have.
Yeah.
Old buildings come with their imperfections, such as squirrels.
We love to connect with nature. What were you doing on Saturday, Sean?
This past Saturday, I got myself a Christmas tree.
Got yourself a Christmas tree?
Did
you check it for squirrels?
I did not check it for squirrels.
Just need to ask now.
Probably should have. Christmas vacation
Yes.
style. Did not check for squirrels, but at this point, pretty confident there's none in there. But that was the big Saturday task.
You know who had a great Saturday?
Who's that?
Ohtani.
Shohei Ohtani. Yes. Pretty great Saturday. Maybe the best of anyone out there.
It's hard to have a better Saturday when you sign a 10-year, $700 million contract.
Yeah. As soon as this crossed the wire, knew we were going to talk about it this week. Astronomical numbers, $70 million a year. And then to make it even better, last night it was announced that he is deferring $68 million per year on this deal until after it is done. So theoretically, he will be making, if he retires at the end of that deal, $68 million a year for the next 10 years in retirement.
Highly unusual contract.
Yes.
Everything about this contract is unusual.
Yes, absolutely.
But props to him, his financial team, and the Dodgers for getting creative, making time value of money work in their favor to structure a deal that benefits him and benefits the team's ability to put a competitive product out there and sign other talented players to remain competitive.
Yeah, it sounds like he came up with the idea, suggested to them, hey, I make so much money on outside endorsements. I'm not really hurting for cash right now. How about we make the cap hit of my deal super small so we can get more good guys on? And then he gets the benefit of more or less a pension in retirement if he retires then. And also, California, notorious for super high taxes, say he moves out of California after the deal's done, he can save some money on taxes too.
Yeah, if he goes back to Japan, moves to Florida, no state tax.
Yeah, and huge news for all the baseball nerds that love to shout out Bobby Bonilla Day. It looks like just as Bobby Bonilla Day is ending in 2035, we'll have 8 more years of Shohei Ohtani Day after that. So
Ohtani Day, a lot more exciting than Bonilla Day.
Yeah.
Bonilla was getting what, $1 million a year?
on a nominal basis, yes, much better. Because I think it's July 1st every year, and people are always like, "Man, you did nothing and made all that money." Think about doing nothing to make $68 million.
Yeah, services already performed, I guess, right?
Yes.
But anyway, huge contract. I remember when Bryce Harper signed his contract. Was it $330 million?
Yeah.
Everyone was like, that's insane. It's not worth it.
Philly's overpaid.
He's a bargain these days.
Yeah, I mean, annual value of less than half, right? I think it's a shade below $30 million versus $70 million. Now, granted, Ohtani, unicorn of a player, unlike anything we've seen in 100 years, can pitch, can hit, everything in the bag. But even still, huge numbers. But just big week for sports business news in general. Mark Cuban, known probably through Shark Tank to a lot of people, also owner of the Dallas Mavericks,
is set to sell a majority stake in the team to the Adelson family, who own Las Vegas Sands.
Yes, known casino family. As you said, Mark Cuban bought 85% of the Mavericks back in the year 2000 for $280 million. Today, the team's estimated to be worth roughly $3.5 billion, so nice little ROI he's going to get there.
Great investment.
And at the same time, interestingly enough, as he's selling the Mavs, he's also announced that he'll be stepping down from his role as an investor on Shark Tank. So they're wrapping up taping of the 16th season, it sounds like right now, and then after that, he said he's out. So really kind of almost stepping back from the national limelight. A guy who's been so outspoken his entire career. A lot of murmurs like, what does this mean? Could he run for president? Who knows?
Maybe he's just tired.
He could.
He's successful and tired. He can just enjoy his life now.
Maybe he's finally the one billionaire ever who's figured out, hey, I don't have to become enemy number one after I become a billionaire and become an out. Think about Elon Musk. He could have just faded off into the distance, saved the world with Tesla, but now is this firestorm? Maybe Mark Cuban's hey, I've got a pretty good rep right now. Maybe I'll just take a step back. Chill out.
Just chill out.
That's what he says he's doing. A lot of people are saying stay woke on that, and maybe he's running for president, but he said there's absolutely no way.
I don't know. If you were a billionaire, think of all the things you could be doing.
Besides being president?
Yeah, besides being president.
Yes.
And besides working.
There's a lot.
Yeah. I could figure out some things to do with my time. But I was able to find some stats on about Shark Tank from Mark Cuban. There's a website called Sharkalytics.
There you go.
Who knew? He invested in 85 deals across his 111 episodes, Sean.
Okay.
His median investment size was $125,000. And the median equity stake taken was about 20%. I think in total was $19.85 million he invested.
A drop in the bucket for Mark.
85 deals. It's a lot, though. I'd love to see stats of his ROI through all these investments, but
yeah, I want to say I heard something maybe on a podcast that he had said it hasn't been great. It's not as good as you think it would be, which kind of makes sense. You'd think 85 deals, he's not going to be able to put his fingers on most of those, his fingerprint, but it's for TV anyways. I'm sure he made more than that.
I gave a cursory look through the companies. None of them stick out immediately, so we'll see. But good for him. 10x when we're about on his investment in the Mavs.
Not bad.
So props. There was a 4x S&P ETF that launched last week that was issued, or it wasn't an ETF. My bad. That's my slip. It was an ETN. Different structure. Probably not worth getting into
absolutely
right now. But it was issued by the Bank of Montreal. Inherently risky.
Oh, yeah. One of those products where it came out, we've gone through the 2x, the 3x, we're at the 4x now, which essentially means, for those who aren't familiar, if you buy into this product, 4x S&P 500, if the S&P 500 is up 1% in a day, theoretically you'd be up 4. On the flip side, down 1, down 4, creates huge swings. The compounding effect just gets ramped up to 1,000,000. You might as well go to the casino, right? This is just gambling. This is a lottery ticket.
I think you acknowledge when you buy it for a day, like the ETF or the prospectus says.
Yeah, because everyone just buys it for a day and gets out.
You're in and out, and it's a lottery ticket. You're either going to do well or you're going to lose it. That's the approach that someone that purchases this should take.
The prospectus was very careful about saying this is not meant to be held for long periods of time. For that exact reason, people do not understand compounding whatsoever. It's proven. A lot of studies to show that. And when you go 4 times, the process gets sped up. It's exponential, right?
Yes.
But we backtested a little bit. We're talking 90% drawdowns all over the place, like it's nothing. On the flip side, just turning small sums into huge sums. But those swings have to be so emotionally challenging on both ends. I would think, say you put $1,000 in there and are just I'm not going to touch it for 10 years. If you turn 1,000 into 50, you're not going to be able to resist. I got to take some off the table. And on the flip side, if it goes down to 100, that's going to hurt. Bad. Even if you've earmarked that, if I lose it, I lose it.
Well, there were a few instances during the back testing where it went almost to zero.
I think the worst. This was all a little bit back of the envelope. Nothing exact here, so don't quote us. But 99% drawdowns possible.
Yes.
we would don't need to back test that to know that's true.
Yes.
But I mean, yeah, equities are painful enough when they go down. I can't imagine 4 times.
No.
I can't imagine stomaching.
I mean, it would be great on the upside, but markets don't move in a linear fashion, unfortunately.
You made the comment, though, about crypto. Crypto can't get pushed through, but this can.
Yeah, that's the confusing thing. There's at least 6 times in this prospectus where it says it's not a buy and hold investment, right? It's very risky. And right now, there's this push between companies that want to issue a Bitcoin ETF and the SEC. The SEC says it's too risky, but here we are proving a 4 times levered product on the S&P, just like there's a 3 times levered product and a 2 times levered product. But I don't know, it just feels like inconsistent messaging to me.
Like, not to say anything about Bitcoin, but like the risks are a little more known versus a Forex ETN. I think the unknown risk there is so big for people. They don't really understand what you're buying into, that it feels more dangerous almost from that perspective of just ignorance about the risks around it.
And why stop at 4 times?
Right?
Why not go 10 times?
Where's the
50
limit?
times?
Where's the limit? 4 already seems egregious. It's shocking to me the SEC has allowed it. But like you said, I don't know where's that cutoff point.
Yeah, who can say?
5X will probably be floated next year, and we'll have the same exact conversation.
Probably. It's just, I think at one point, just trying to remember back, I think it went 1.5 times, 2 times, 3 times. Now we have 4 times.
Yeah.
So I guess that's product innovation for you. On different kind of innovation, Cybertruck's been in the news a lot lately.
Yes, the Tesla Cybertruck. Deliveries have begun.
Yes.
Felt like we're several years away from that initial investor day where he broke the car window and everyone talked about it.
Yeah, it felt like forever ago.
Like a spaceship that never would be released. Well, people are seeing them out in the wild. There's videos out. Some have been delivered. People are seeing them on the roads. A lot of safety concerns. We talked about it before we even read the articles, but a lot of safety concerns. A lot of people angry that these ugly, obtuse, weird-looking vehicles are on the road. But
that's my thing. I think it's just a weird-looking car.
It's gross. It's ugly.
It looks like something you would design like in 7th grade when you're learning how to use some type of tech system in shop class.
Yeah.
And you're like, man, look at this car. Isn't it cool?
Or if you ask like a 4-year-old to draw a car.
Yeah.
Right? And they're trying to draw a car from memory. Like, it feels like that. It feels like a very look at me car.
It does.
Like, come on, man. Like, you're buying that for one reason, so you could break people's necks.
It's a car that probably doesn't fit either of our personalities.
No, definitely not. Definitely not. But it's a 7,000-pound hard steel car. Goes 0 to 60 in 2.6 seconds. There was the video that Tesla put out last week of it allegedly beating a Porsche 911 on I think it was a quarter-mile race from a flat stop.
I think, if I remember that video right, it was the Cybertruck towing a
911.
Towing a 911, yeah. And it still beat it down the track.
Yeah. Meanwhile, a video came out today that we found of it couldn't climb up a little hill with a Christmas tree.
Yeah, that was making its ways around business news. I think it had to get towed by a Ford.
Yeah, there you go. Good old-fashioned American pickup truck.
Yeah, I think that Cybertruck went off-road. It looked like they cut down a Christmas tree.
Yeah.
And just couldn't make it up.
Off-roading may be a little bit of hyperbole there too. It was a hill, right? It was a hill with a little bit of snow.
Yes.
But I don't know. Thoughts on the Cybertruck overall? I know you said you're not a fan. Anything else you want to stick in there? Could this mean anything for Tesla?
I think it's goofy looking. I'm sure if you're a Tesla fan, you'll like it.
Oh yeah.
You'll talk yourself into it.
Oh yeah.
But I don't know. I think it's weird looking. I want to buy it.
Yeah. Fits the narrative arc of Elon Musk, I feel like. If you followed him up to this point, this car makes perfect sense.
Some of the stuff seems interesting, like the steel doors and stuff, but that's also part of what makes it unsafe.
Yeah, there was the European Transport Safety Council has said that they don't want them to bring it to Europe because they think it's going to pose a huge danger to a lot more walkable cities there and cyclists. Obviously, if you have a hard steel heavy car with sharp angles, not great for the people on the receiving end of that. Someone also pointed out lack of crumple zones that most cars have to kind of absorb the shock. Imagine that thing hitting a Prius. That's just not a contest.
I did see in the terms and conditions for the vehicles that have been delivered, you can't sell it for a year. Have you seen that?
You can't resell it?
Can't resell it for a year.
What was the point of that? Just keep it scarce,
I guess keep it scarce.
keep prices up.
But, the nice thing about our system, Sean, is markets will decide whether they like
That's
the
right.
car or not. It's not
That's right.
for us.
Who are we to say?
Yesterday was an interesting day in the market.
Yes, a first since 2022 happened. So yesterday, the S&P 500 was positive. Yesterday, Monday, December 11th, the S&P 500 was positive, yet all 7 of the Magnificent Seven's tech stocks were down, and the market still was able to persevere. It's the first time that's happened since 2022.
I think that's a great thing.
It's a great thing. People have been complaining all year of, oh, this is just a tech rally. It's really only 7 stocks that are doing well. The rest of the market is lagging. All been true. I don't think we've bought into that's such a terrible thing like other people, but the fact that more stocks are taking us higher now, I think that's definitely a healthy sign.
Oh, yeah. Last I checked, before we jumped on here, I think 65% of stocks in the S&P right now are trading above their 200-day moving average. It's getting close to the highs of the year. It looked like in October, November there, when we had dipped down, I think it was somewhere like around 25, less than 25% of stocks in the S&P were trading above their 200-day moving average. And that's when you looked at the Mag 7, so much of S&P performance was just attributed to those 7 stocks.
Yeah. Performance much broader now. Value has kind of closed that gap a little bit in recent weeks and in almost the past 2 months at this point. That value tech gap has been a lot smaller. But this is kind of what you expect, right? This is why you diversify.
Yeah. There was an interesting study that was published last week that you ran across, and it was, should you just go all in on stocks?
Yeah, so kind of in that diversification vein, I guess jump into a new topic here. There was a paper that came out, Bloomberg reported on it. Prevailing wisdom in the industry is you want a balanced portfolio of stocks and bonds. 60-40 is the split that gets thrown out all the time. And this paper suggested maybe you should just be 100-0, just all stocks, because in the long run, that usually leads to the best outcomes.
I think in a perfect world, it makes sense, but we live in an imperfect world. So I understand the thought process, right? Markets go up a majority of the time. Why do you need anything else? But people are rational or irrational.
Irrational, yes.
And they make emotionally driven decisions.
That's exactly it. Like, this is that breakdown between academic and like theory and then how things are put in practice. Like we have these discussions all the time with clients. In bull markets, everyone wants to be 100% equity. In bear markets, everyone wants to be 0% equity.
Everyone's cash.
Right? Yeah. So you feel those swings, and in the real time, in theory, it's great to say, okay, 100% equity. I know 40 years from now, chances are I'm going to end up with the greatest number at the day of my death. I'm going to have the most money to pass down. In practice, stomaching those swings, much harder to do than it is to say. And that's, I think, why we don't do it, right? Like, imagine trying to pitch this to people.
I think you need to be able to stomach some large drawdowns to make it work. You need to be willing to watch more than half of your portfolio just disappear.
Think about 2008. Yeah. You work your whole life to have this nest egg for retirement. Say you have $1 million. To watch half of that hard work just vanish. It's got to be so painful.
Then you start to add a draw rate on top of that.
Oh, yeah.
And then the problems can just compound so quickly.
Yeah. And one of the researchers said in the paper, we looked at the actual paper, he said, as long as equity investors are able to stick it out. That was the first thing he prefaced it with, which is exactly the problem. Like, so many studies, countless studies and countless years of experience have shown investors can't. They can't do it. No matter how much you coach people up, no matter how aware they are of these things, you can't do it because we're imperfect and we're irrational, no matter how much we acknowledge it.
Isn't that how they say bear markets end? They end on capitulation, where people just essentially throw in the towel and say,
like, I'm done.
I've had enough.
We look at that AAII sentiment indicator all the time. There's usually a decent correlation when people are most bearish and the market starts to turn around, and when people are most bullish and the market starts to turn down. We extrapolate, we get excited, and no amount of coaching or education is ever going to change that, unfortunately.
One of the things I was reading, it said, if you just go by the study, it was you could potentially have, depending where you started, like $1 million or 777 or 770,000. So like, if you add bonds, I don't know. It's all about like what causes you the least amount of stress. and like you don't freak out.
Yeah, and there's also the idea of like return per unit of risk. Like we talk about volatility being the whole thing. It's like, would I rather end with 770,000, but I was able to like stomach that ride and be comfortable and feel confident in it, or $1 million? Is that $200,000 swing? Is that worth all the pain and suffering that may have, those like swings may have caused you along the way? I think there's something to be said to that as well.
You know, I think it goes back to the Mark Cuban story. Like, what do you need to be happy with the life that you're living? Like, is your goal just to get to the highest balance that you can when you die, or is it actually to like enjoy your life?
Exactly.
And not have to worry about what the market's doing every day?
Exactly. I agree.
Last week on Friday, I think it was Friday, there was the University of Michigan inflation expectations were released.
Yes. Good segue for irrationality of people.
If we want to talk about irrationality, yeah. The prior 1 year inflation outlook from survey respondents was 4.5%. 1 month later, it fell to 3.1%. Like,
no one knows.
No, like, this is the problem with survey data. Like, is it reliable? And the crazy thing is markets trade so much on it. There's so much survey data, economic data that comes through surveys. Like, is it any good?
No. I'm pretty confident in saying these days no. Like, this data, we have the jobs data, the JOLTS data that no one replies to anymore. ADP puts out their number that's always revised way up or way down. Like, so much of this data, it's like kind of useless. Maybe mosaic theory of you put it all together and it can mean something, but like you said, people trade on it and it's essentially meaningless.
In this day and age, like, I feel like there's analytics for everything. There's real-time data. There has to be real-time data available for stuff. Isn't there a better way to capture this information than sending surveys out?
There's got to be. And the fact that, too, like we joked about last week, people are upset because prices haven't come down. And that shows a misunderstanding of inflation. Unless inflation turns negative, prices are not going to go back to where they were. Yet we then ask consumers, what do you think inflation's going to be next year? And it's like, well, if we don't understand inflation in the first point, why should we trust what they say? Like, that's the thing I'm confused about. Like, who knows? A person on the street?
And it seems like economists and markets get so excited about it.
Yeah.
Like, oh, man, look at that plunge in inflation expectations.
Yeah.
Like, what a great thing. Soft landing.
Aside from the direction of it and getting an idea of, do consumers think things are going to get increasingly expensive or less so? Maybe there's some value there just directionally.
Yeah.
But the fact that we look at, it was estimated 3.2 and it came in 3.1. Who cares?
Right?
Who cares?
My takeaway is people are feeling better about inflation. Like, but the size of the move, like you said, maybe doesn't matter.
No.
And like, you just think about what happened over the past month that made people feel better. Stock market went up. Gas prices came down.
Yeah, interesting how that works too. It's like you boil it down. Is it really just gas prices? People
Right.
get upset when gas prices are high and happy when they're low.
Maybe.
And consumer expectations have been awful for a year plus now, yet people continue to spend at record levels. So, I don't know. A little bit of a rant there we need to get off our chest.
Yeah.
Like, we watch these economic data points come through, and it's like, who cares? What does this mean? Let's not get lost in the weeds here.
Yeah, I think we've been holding that one in since Friday. But let's pivot to Uncorrelated. So this first story is about perhaps one of the most popular business softwares or programs of all time.
Yes.
Microsoft Excel.
Maybe would you call that the GOAT, the greatest of all time for business software? Like, if you took away one piece of software, things would be completely different. Like, what business doesn't use Excel?
You know, I think it's probably on the Mount Rushmore of business software.
I would say the number one, right?
Yeah.
I think it's got to be the number one.
Has to be the number one. I think there's a joke in this article that is Excel is secretly holding up the world's financial system.
Absolutely.
It's probably a bit of truth to that somewhere. But there was the World Excel Championships in Las Vegas, and it is an Olympic competitive spreadsheeting event. It's not an Olympic event, but it's Olympic style.
Yes.
You get what I'm saying, right? It was held in Vegas. And
of course.
Here's a quote. The passion, the energy, the excitement that you bring to spreadsheeting, you are legends, said Microsoft's Johnny Thomas at the beginning of the face-off. I hope your calculation engines are full throttle and your fingers are feeling nimble.
It's incredible, Americans' ability to take sometimes the dumbest things and make them such an intense sporting event that you can root for.
Yeah,
you think about like cornhole on ESPN these days.
The setup of this event looks awesome.
Oh, it looks incredible. It looks like one of those like esports arenas.
Yeah, it feels like something that can only happen in Vegas.
Yes.
They had that announcer who says, "Are you ready to rumble?"
Oh, Buffer.
Oh no, they had someone else. His name was Steven Rose. He did
Buffer. Okay.
Same style.
He wasn't in the budget, Bruce Buffer.
Yeah. Maybe he was doing other things, but there was a computer science PhD that is known as the LeBron James of Excel that was introduced. Another contestant's name was B Money, and he came in as if he were a prize-winning racehorse, whatever that means.
Oof, okay.
So it sounds like some interesting entrances from the participants at this event, but I don't know. I think it's interesting. Who knew such a thing existed? Yeah,
they showed, like you said, one of those things that only happens in Vegas. They showed there was a live crowd, a woman's in the picture, like drinking a beer. So they were selling alcohol at the Excel World Championships, but just crazy. And if you get to the end here, Bruce Buffer definitely wasn't in the budget, it looks like, because for all the pomp and circumstance, it was a $3,000 prize.
Oh, yeah.
It looks like. So that's tough. But hey, banners hang forever. So
that's right. And get bragging rights.
There you go.
You're the best Excel user, I guess. But I love this other story, Sean.
Yes.
This takes place in New York City, and it is the Santa-themed bar crawl known as SantaCon. And this is when people, mostly younger people, dress up like Saint Nick, or I think some even the Grinch, and they stroll Manhattan, starting at 10 a.m., and they end up in East Village at 8 p.m. That's a long day.
It's a long day.
The money's supposed to go to charity. I think they're recommended to pay $15 at each venue that they go to at the door. Yeah. So that's the purpose behind it. But
10 hours of drinking in general, like expensive anywhere. How much money do you think someone spends on drinks if you're drinking for 10 straight hours in New York City and donating $15 at the door?
Yes.
All for the donations, but just like
it's an
from a monetary perspective, that's an expensive day.
Well, I have a stat, not so much about the drinking, but the National Retail Federation expects holiday spending to reach record levels this year, between $957 billion and $966 billion. That is a mind-bending number right there in 2 months.
Do you say that's just in the U.S. or worldwide?
I think it was the U.S.
Just in the U.S.
I'll double-check that, but
it's a big number.
Big number. I love some of the quotes in this article, though, that commuter rail lines from Jersey to New York banned passengers from drinking on their trains headed to Manhattan starting at 4 a.m. Saturday through noon Sunday. Could you imagine cracking open beer at 4 a.m. on the train in Manhattan?
I did have this Saturday. There's several people I saw on social media that were in their Santa costumes out. This is a big deal, apparently, especially if you live in New York, Hoboken, all that stuff. You don't miss SantaCon.
And then the New York Police Department reminded revelers that the city's open container laws prohibit consuming alcohols on the street.
Yeah, I'm sure that went well.
maybe they were able to raise some money, fill the coffers.
Yeah, there you go. End of the month. Jason Kelce would dominate that, by the way. I was thinking about the Santa costumes, mummers. He wore the mummers costume. He would dominate the Santa bar crawl if it wasn't during the season.
Should this be his last year with the Eagles and he decides to retire? Maybe he can do this next year.
Probably out there. But
just a man of the people.
Germany gets Oktoberfest, and we get to dress like Santa.
SantaCon. Fed meets tomorrow. We'll see what happens. Hopefully it's a boring meeting.
Yeah.
Maybe they'll acknowledge that they're just going to pause. We'll see.
I think messaging probably stays mostly the same. It seems like all day on Bloomberg, they resign themselves to the fact that they wanted to drum up some drama this week. As we get closer to the end of the year, there's less to talk about, but we got a boring CPI this morning. All signs point to a boring Fed tomorrow. Hey, make economics boring again. I'm all for it.
Oh, yeah. Like today's CPI report, boring. It was a relatively boring number. Yeah. It's funny. Yesterday was one of the first times on Bloomberg, or really any financial news, that I heard someone say, it's a boring day.
I got nothing for you.
There's not a lot to talk about.
But it's so welcomed after these past few years, But it's usually it's usually the week between Christmas and New Year's, right? Where like nothing's really going on, volume is pretty low, but maybe we're starting a little early this year, which fine by me.
Yeah, I'll take it.
No news is good news.
Let's have a drama-free holiday season here. Last piece of information. Stay on the lookout this week for the awards survey that we talked about last week.
We've nailed it down. We're gonna have 10 categories to vote on. Excited to put those out, and once again, that episode will come out December 27th, where you can hear the winners, and hopefully I think we're going to put out an accompanying blog post as well with the winners.
All right, sounds good. Until next week.
See you then.